Morning Wake Up with Dave Ackerley on More Compelling Talk Radio, 1320 WILS.
It always seems like, how does this work? We go into a holiday weekend, and gas prices, they inch up. But I note, coming in today at a couple of my favorite places to fill up the rig, that they're down again, and we're getting down in the $2.30 a gallon range after having, bumped up. So why is it going in the other direction when so many people, a record number of people, could be on the road this holiday weekend? Well, let's visit this morning with oil industry expert from Crudefunders.com, Tim Snyder. Tim, welcome.
Thank you very much. Good to be with you.
Appreciate having you here. The normal American typical supply and demand is a factor, but I guess this time around, Tim, it's not the only factor, is it?
No, it really isn't. I mean, you turn on the television and one of the things, or the radio, and, you hear all kinds of conversations about high alerts at U.S. airports and those kinds of things. Those things, long lines at the airports and extremely high prices to fly somewhere, force people back onto the roads, and that's one of the things that we're seeing this year. It's an 11-year low in gasoline and diesel prices, and that sure is beneficial right now.
It is when you look at the number of people who are out there who are driving. But what I'm not getting here is that normally seems to be where some independent operators will take a little bit of profit. Normally gas isn't the thing that's at the stations isn't necessarily their profit centers, but I mean they might grab a little here, grab a little there, but that doesn't seem to be happening. So what other market forces are we seeing in play, not just in the United States, North America, but globally right now?
Well, you've got supply and demand issues. Obviously last week's Brexit scared the market to death. But it's all recovered. We've gotten, in the United States, we've recovered about 91% of what we felt like we were going to lose last week, and everybody thought that, the sky's falling. Chicken Little was wrong once again. Things turned around. We're also looking at global supply and global demand. Yes, in the European Union, we'll probably see some slower demand issues, but I think a lot of that's going to be offset by the Chinese, increased demand by the Chinese, and increased demand in the United States as well for gasoline and gasoline products.
Well, Tim, and those we think about petrodollars in companies, but dollars is a key word because these transactions take place in dollars, and the dollar got stronger, and that can bump oil down a little bit too, can it?
Yeah, it did. That's one of the things, and I write about that every day in my daily blog. And one of the things that I think is very important is that we watch the value of the U.S. dollar. The value of the dollar, if the EU, sinks and goes into a recession, that will force, just in a flight to quality, investment back into the U.S. dollar and other currencies, X of the euro, and so that makes the dollar stronger. When the dollar goes higher, it makes any of the commodities that are mediated, generated, or produced in the United States, that makes them more expensive.
Tim, was there any in your mind? You follow this, like you say with your blog, you follow very closely. Was there any in your mind? I guess I want to say market rigging going on post Brexit to shore things up after that initial hit that that the European markets took, the pound sterling took, and all of a sudden there's some recovery. It didn't hit the American markets as bad, although they did take a hit too. In your mind, any kind of market rigging, or was this normal market forces at play?
No, I think it was normal market forces at play. We in the commodity markets, we talk about fundamentals, and fundamentals are just the news stories that drive what we're dealing with. Emotion is a huge fundamental in the markets, and last week was an emotional vote.
Sure.
And we had an emotional response in the markets, and once everybody realized that nothing changed on the Friday after last Thursday's Brexit vote, things began to, it took a couple of days. Everybody was still concerned over the weekend. But on Monday about midday, everybody realized, oh, yeah, nothing's really going to happen for a while. And it could be as much as 2 years before there's any real change that comes about from the Brits leaving the European Union.
Where's our main oil product trading at right now?
Right now,
price-wise?
About $48.13 a barrel.
So you're almost you're almost at that magic mark where you'd like to be, maybe a little north of 50, where people can make a profit, exploration can take place, and yet gas prices are low enough that it kind of fuels that drive.
You're absolutely right. I'm looking in Lansing, Michigan, and you guys average gasoline prices, and your average is about $2.34
Yep.
a gallon.
Yep.
You got some good prices. Sam's got a good price, Valero's got a good price, Admiral's got a good price, Meyer's in pretty good shape.
Mm-hmm.
I would imagine you guys will probably see gasoline prices probably before the end of the summer, probably around the 220 range as an average, and then we may start to see them move up. Although remember, demand is highest right now. We are at the peak demand point for this year, and we'll see if the oversupply that we have begins to subside just a little bit. We'll start seeing that slip back up a little bit, and we'll see crude oil above $50 a barrel. That's the magic number.
Yeah, it seems like they're at that point. Everybody, I don't want to say everybody's happy. You always find somebody who's not. But, I mean, the people who go out and roll the dice for a living, they can still do that and feel like they've got a chance for return on their dollar. True?
Well, absolutely. I mean, that's exactly what Crudefunders is about. Our opportunities is we look at where is the next, big oil boom going to come from. We believe it's about to start. We think within the next, anywhere from 6 weeks to 6 months, the oil prices are going to start to move higher. We don't believe we're going to see the astronomical prices that we had seen before. It's going to be difficult to move back to $100 a barrel, but anywhere in the $60, $70 range by the end of 2017 would be very workable. And that's the reason why opportunities like we bring forth in Crudefunders, where for as little as $1,000, an average investor can get involved in this next big boom. And you can do it from the comfort of your own home. You're an individual investor, and you don't have to be the accredited investor anymore. And that makes a big sense. It's a web portal. It's the new way of doing things, and it coincides perfectly with the beginning of this next good oil increase that we should see.
Tim Snyder's at crudefunders.com. You can go there, check it out. You do your due diligence there. That's important. But following where the oil industry is going right now, on this 4th of July weekend here, gas prices are delightfully low, but they're not so low that they're doing a crush on the American oil industry, which is hugely important in our economy as well. And we're not the only ones worldwide. Tim, as always, appreciate having you here. Have a great weekend.
Yes, sir. My pleasure. You too. Happy 4th.
Thank you.